Now, the next topic in the basics of investment is investment versus speculation. It is one of the most frequently asked questions that does investor and a speculator both are one, or investor is different from a speculator? So it's fundamentally speaking, the investor and speculator are two different parties. Why? Because I'll tell you with a simple reason. Investor is a person who invests his money in purchase of certain financial assets with an expectation of in future that particular investment will generate a higher rate of returns or positively a higher rate of returns. But speculation, the person who does these speculative activities are known as the speculator. A speculator never always believes that a long-term investment. He always wants to have or gain the short-term benefits. His intention is very simple, that he always cautiously observes the market changes or the prices of the securities. He'll go with that particular investment option and he'll just invest his money in that particular security, and after in a short span of time, after fulfilling his dream or his wish, he'll come out from that investment option. So in such a way, these two parties are different. Investor is different and speculator is different. And for your convenience, here I am presenting you the basis for comparison between the investor and a speculator. First, basis for decision. See, investor takes decision on the basis of studying the fundamental factors. Fundamental factor here refers to the, see, investor before investing his money, he'll go with analyzing the country's economy at large. Next, at industry level analysis. Later, the company level analysis. Like it's a big process. Investment is a big process comparatively with the speculation. Here, investor always thinks about the company's performance in simple terms. He look at the company's performance, how the company has performed in the past and present and in future. Then in speculation, it's all about the analyzing the market psychology, understanding the trends, how the market is moving. Sometimes the market moves positively upwards. Sometimes you can see the negative trends, a complete downfall. All these indexes will fall down. Because the reason is very simple, that is the market dynamics. Here speculator simply concentrate on this market psychology rather than understanding whole concept. The next is time horizon. See here, investment is a long-term perspective process. It is a long-term process. Investment is done for a long period, not for a specific or temporary period or short period. So investor usually concentrates deriving higher benefits by investing his money for a long period of time usually. Because if you invest your money in particular security for a long period of time, you can expect a higher returns. Then speculator usually always thinks about the short-term benefits. So that's why he never thinks about the long future or the future perspectives of an investment. He always considers the short-term motto or the short-term benefits. His objectives are completely different from the investor. Then next is risk involved. See, investment involves a moderate risk because investor, before investing the money, he is very cautious about all the things. Because investment is a systematic process. It is just like a goes step-by-step process. So there is no chance of getting a higher risks in investment. But whereas in case of speculation, the risk factor is very high. Because here simply the speculator is playing with the market dynamics. The market changes. So as usually, the risk involved in speculation is very high when compared to the investment option. The next is intent of profit. Here, how the investor is getting the profits in investment means simply like the changes in value. See, for example, assume that the investor invested his money in purchasing of so and so company equity shares. The present price of the equity share is 20 rupees each. See, he invested that his investment period is 1 year. After 1 year, the equity share price is increased from 20 to 32 rupees. See, here you understand how the value of the particular security is changed. So, the difference amount that he is going to get the investor is the profit here. His intention is very simple, that is, he always wants to see the higher prices for his securities. Whatever the assets he has purchased, he is expect always the increase in the value of those securities. But whereas here the speculation is all about what? Changes in the process. Speculator never waits for a long period of time to earn profits or to make profits. He always focuses on the market, understanding the market trends. Usually he is not that much of cautious. He is very daring person. So he always observes the market trends and immediately goes for the investing in those financial securities and finishing that process as early as possible by generating some returns or in some cases no returns too. Next basis for comparison is expected rate of return. In case of investment, usually the investor expects a modest rate of return because before investing his money in any one of the financial asset or security, he has complete analysis like risk analysis and return analysis. He knows all the things, pros and cons of the investment, so that he is always at the safe zone when compared to the speculator. So in such a way, the rate of return here is always modest because everything is balanced even before at the time of taking the investment decision only. Then here the rate of return is obviously a high because why? Here speculator intention is very simple. He never invests his own money in the purchase of financial assets. He'll procure the funds from other persons and he'll invest in the market. He'll get the benefit, and so that, see here, the involvement of the speculator is very less when compared with the investor. Whereas investor goes with the investing own funds, but whereas speculator never goes with investing the own funds in all the cases. So here the rate of return is higher obviously than the investment, but it is not confirmed because it is not guaranteed. Higher rate of return is all the times is not guaranteed, but in exceptionally, usually in all the times he may expect certain growth in his investment because his role is simple as that. That is, he always wants to make profits in short period of time. He always concentrates on the market trends, how the market is moving, and he is going to purchase the securities whenever the prices of the securities are coming down, and he sells the securities whenever the price of those securities is going up. So in such a way he'll play sensitively, and in most cases it requires some kind of dareness too. Then funds. Here the investor uses own funds. He uses his own money in purchasing of the financial assets or securities. But whereas here speculator never uses own funds, he goes with borrowing the funds from others. Because now he is playing with the markets, in simple words. Like he is observing the price changes. He is going to make the profits out of the price changes. Usually whenever the securities prices are going up, he comes forward to sell. Whenever the price of securities is coming down, he comes towards to purchase those securities with an intention to sell them at higher prices in the future. The next is the income. The next concept is aspect is income. Here, in case of investment, the return is very stable because everything is analyzed in advance. Before taking the investment decision itself, we analyzed all the things in such a way, so we have taken a proper care to minimize the risk as much as possible. with our speculation or with our forecasting. We used all the things, and remember, speculation is also a part of this investment aspect, but not a whole, because speculation is also there in the investment. Because investment is a very broad term, it contains or it encapsulates all the things. Then here the income is uncertain in case of speculation. Why it is uncertain means because generally market trends are usually unable to predict the future. We can't predict the future based on this market trends of our particular financial assets in which we intend to have. So in such a way, there is uncertainty always exists in the speculation, because speculation and uncertainty both are linked with each other. You can't separate them. Then the last one is behavior of the participants. How the investor behaves. Usually investor behaves very cautiously, very carefully, because at every point of time he is very cautious. In each and every move he will take enough care, and he's always very conservative in nature, very traditional in nature. Then whereas speculator is completely different from the investor. He is always daring, and in sometimes he acts as like a careless person, because he never have the future perspective, a long-term perspective. He always goes with how the market goes. So in such a way, you can clearly understood the differences between the investor and speculator. So these two parties are different. They are not one and the same, because, and moreover remember, speculation is also a part of the investment, because investment it doesn't complete without the speculative activities. All these are included here also, but this is something little bit different concept from the traditional concept of the investor.